Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now, if we have, and how you can take advantage of this, if we're trading around that 99.5, 99.87 area, okay? Notice that we want to go 99.5. Here, we're at the money options. These are, again, November options. So if you're looking at an expiration play over the next 16 days, you can start to price out. If we think the market's going to go off, maybe you could do, at this point, with an election, I would wait till after the election to see what kind of market reaction the U.S. dollar has against the world. Because, quite frankly, over in Europe, the polls, as you probably have guessed or have heard, are sharply in favor for seeing Obama win as president. And in Asia, as I was just in Singapore, they were more accepting of looking for an Obama win than a McCain win, by the way. And so everywhere that I've personally traveled in the last 6 months, people have been more looking for an Obama win. So maybe we've seen a market price in everything if Obama takes presidency tonight, which if that's the case, then maybe the volatility, we may want to look at some type of a strangle in the market. And I would say, you know, something safely, maybe a 1.5 or a 2-point out of the money strangle, meaning we would look at the puts from a 97.5, looking at selling the 97.5. You'd have to sell the bid around 132, and look at maybe the 101.5 calls. If I'm selling that, I'd sell 160. So I would be taking in approximately 290. And that would give me protection approximately down to around 96.5 in the market, up to about 102.5 on the upside. So in a case like I'd have to say, okay, where can the market go? Are we near support? How many days left to options? Has the market already moved? That's important questions that I have to ask myself as a trader. What's my risk? What's my reward? What's the best strategy? Look for opportunity and then apply the right strategy. That's important. That's what I like to do with clients in my advisory service. We look for these opportunities. I try to point out to people, hey, here's what my technicals show. My technicals show that we're bullish, bearish, and here's a proper way to tackle it. Now, I'm going to show you this particular graph. This may make sense to you. It may not make sense to you. But this was something that was, this is actually taken straight from my second book. Again, Candlestick and Pivot Point Trading Triggers. I think it was one of the best books. I've written 3 books, coming out with a 4th with the Almanac. This is probably my best book because there was so much information in there that applies to the market. Then, more importantly, it applies more so to this day. This is the type of phases that the market is in. The markets try to do 2 things, folks. They move, and there's 2 main parameters or variables that we all look at, time and price, right? Options, there's a price and there's a time. There's an expiration date, all right? Markets end at the end of the day. There's a time and they're going to have a settlement, which is the price. And there's market cycle or phases. And this is what people have to understand. Markets go through phases. They go through strong trending phases, and then they consolidate. And unfortunately, and I just gave this example the other week, and I'm a little late for this, but this is exactly what we were doing with the indexes, right? The stock index market, the both futures and cash. The stock market, since approximately the first week of September, have been in a strong downtrend. Actually, they've been in a strong downtrend since they peaked in October of 2007. But more importantly, we've been in a very strong downtrend for the last 8 weeks. And what have we really done? We've gone through a wild consolidation phase. I personally think that the market was getting ready for a reversal. But unfortunately for people, they look at this and they forget that eventually the market's going to pause or do what we call it's going to consolidate. and then they think the market's going to sell further, so they finally get the courage, because they're not selling here, they finally get the courage to sell there. And then the market rallies, and then they go, oh my God, I got stopped out. And then they think, well, the bottom's in, I got to go long. And then what happens? The market reverses, and it just chops them up left and right. We may make lower lows, we may make a higher high, but in essence, all that happens is the market goes through a period of consolidation. Now, I think if you can remember, turning points in markets are caused by these type of market condition: consolidation, consolidation. And then after consolidation, we're either going to resume the trend or we're going to reverse the trend, and we need, as technicians or traders, we need to look for hints or clues to which way the market's going to go. This works on short-term as well as long-term market movements. So in essence, what I'd like to say to you is that if this is the case, especially as an options trader, if we've been in a very strong trend, both in time and price, then we are probably going to go through a consolidation phase. And if we have been in a strong trend and we can anticipate we're going to go in a consolidation phase, then potentially selling calls and selling puts or writing with a risk-reward ratio, a game plan, would be the proper game plan for that type of trading environment. If we are in a beginning or a breakout of a consolidation, especially a longer-term consolidation, then obviously we want to be more of a directional trend player. A strong directional player would be maybe selling calls, and a very aggressive strategy would be applying that premium to buying puts. BP does not stand for British Petroleum, buying puts. That would be a very bullish strategy. But today's focus is not about option strategies. It's about market conditions, what market condition we are currently in, and under what seasonality of the market are we in. And for the Japanese yen, I think it's important to notice that, we probably can be in a consolidation pattern for at least the next 16 days. So that's why I'm looking at those November options, and time, of course, will tell.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.